Live from Bloomberg's world headquarters in New York, I'm Shonali Bassick.
And I'm Tim Stenivek. Welcome to Bloomberg Crypto, a look at the people, transactions, and technology shaping the world of decentralized finance.
And Tim, global markets, they're on edge thanks to uncertainty around the Fed's rate decision, U.S. CPI coming up tomorrow, and European politics. Bitcoin might be set up for a new round of volatility.
Plus, in just a moment, Ian Rogers of Ledger joins us to discuss his products and providing security for crypto investors.
And we're going to discuss deals in the IPO market. Kraken is said to be considering raising a final funding round ahead of a possible public trading debut. And Robinhood makes a move for Bitstamp.
All that and more over the next half hour on a Bloomberg Crypto. But first, here's a snapshot of the market, starting with Ether. Over the last week, down 9.3%. Even with the excitement following the SEC surprise pivot last month toward approval of those spot Ether ETFs, that crypto has not breached its 2021 record. Moving to Bitcoin, which did hit a record back in March, down over the last week of about 5.9%. We can go ahead and round that up to 6%. It did move lower on Friday, and it's moving lower again today. As Shonali mentioned, crypto investors could see some volatility depending on what we hear from the Fed and what we get from CPI. The correlation between Bitcoin and the 10-year yield is unusually negative right now. And the Bitcoin mining company Bitfarms trying to stop a hostile takeover by Riot Platforms with a so-called poison pill. Reminder, Riot Platforms made an unsolicited $950 million offer that was last month to buy Bitfarms. Shares of both companies down right now. Shonali.
Speaking of Bitcoin volatility, Tim, I want to take a look here at the net flows for all 11 Bitcoin ETFs since their January launch. A net $15.6 billion has poured into those ETFs. And on Monday, we saw 65 million of outflows, snapping 19 straight days of inflows. Remember, ETFs are an on-ramp for people who are using other services, particularly hardware services for crypto. And we're going to talk a lot more about that in this show, Tim.
Well, speaking of that, let's turn to the company Ledger. Because more than 20% of the world's crypto assets are secured by Ledger, the company offers connected devices and platforms in more than 200 countries. Ledger started shipping pre-orders for its latest hardware. It's called the Stacks wallet. It was designed by iPod builder Tony Fadell. It's the world's first palm-sized e-ink touchscreen to safely read, understand, and sign transactions. Pairs with your smartphone so you can check your balance and do more with the app. It also allows self-custody of your crypto. That's why it exists. In other words, instead of keeping your crypto on an exchange, you're carrying it around with you in your Stacks wallet. We're joined right now by Ledger Chief Experience Officer Ian Rogers, who joins us from France right now. Ian, good to see you again. I got to tell you, just talking about this product in the newsroom, I still think there's this gap in understanding about why someone would need self-custody of their crypto, especially if they're buying crypto as an investment rather than using it to buy and sell things. So what's the use case here for those people?
Well, I think, the question I always ask is, if not self-custody, why crypto? What really is the innovation? I think for the very base level, if you think about the revolution of the internet, that was this revolution where information became free. It moved around more freely. So what's the revolution of blockchains? The revolution really is digital ownership. So security and custody is important. Wherever you have your digital value, you want to know that it is safe and it's available to you when you want it. And having self-custody or ownership, self-ownership is not only an option, but in many ways it's a right. And it's a right, not only to own your own value, the way that you can take your own possessions and put them in your personal safe, but also to be able to use them, right? You have possession of your passport and your driver's license, and that allows you to use them for things that were not necessarily anticipated by the DMV. And that's the same for all digital ownership.
Hey, Ian, one thing that I've been thinking about over the last few days, especially with Apple's event yesterday, where they talked a lot about AI happening on your device rather than in the cloud. And over the last few weeks and months, where with the rise of AI, we've heard sort of this return to quote unquote, on-premise from the cloud when it comes to AI. And I'm wondering if there's any sort of parallel with what you're thinking about at Ledger with what we're seeing in AI right now in the return to on-device and on-premise.
Well, definitely in terms of, I think that AI and blockchain are two sides of the same coin. AI brings digital abundance and blockchains are fundamentally about digital scarcity. And we're already living in a world where you're looking at web pages that were made by AI, that was fed by web pages that were made by AI. So at some point, knowing that it is actually me who is saying what I'm saying, and that it's not a deep fake and it's not altered, is incredibly important. And it's important not only if you want to hear what I have to say, but also if you're using things I've written as input. I mean, simply logging into your X account with your ledger as opposed to only your computer is a strong signal that you are a human. And then you could, on top of that, have a form of digital identity which says, okay, I'm actually a unique human, or I'm the same human that owns those other two accounts. So I think that increasingly we'll see the ways that that these two things go hand in hand. And certainly Sam Altman has understood this for a long time. It's why he started WorldCoin. So I think that these things are really two sides of the same coin.
Yeah, Ian, it's interesting because you talk about them in the way that they work together, but there are a lot of people who talk about blockchain as though it's building kind of an alternate internet as well, apps being built on chain instead of traditional way internet. Is it convincing that there could be a new kind of internet built on blockchain instead? And if that is the case, then how long does that really take to materialize? Because it seems like there are parallel universes going on right now.
It's such a great question, and I think the answer is we need it to go that direction. The Rabbit R1 device was a hot device at CES this year, and we talk about an action model, a large action model, and a lot of it, after Apple's announcement in AI yesterday, you can see that Apple is moving toward an action model. I would argue that those action models are much more convincing and much more fun for us as users when that's coming from a world of digital ownership, instead of this world where my logins, basically hide my preferences behind thousands of different websites. As you travel around the web, you're constantly logging in using, something like passkeys or 1Password to log into, to many, sometimes 10 different websites in a single day, so that you can get access to your preferences and your data. So that makes something like Rabbit R1, for that thing to work, you've got to give it your credit card information. You have to give it your logins, and now it's going to go kind of scrape the web in this Web 2.0 way and try to take you through that. I mean, it's a really interesting idea, but it's not. I don't think that's the direction that technology will take us in, 15 years from now. I think instead, you'll have ownership of your value, your identity, your preferences, and as you move around the web, you'll simply say, yes, I'm giving access to this particular data temporarily. You're basically federating, whether it's your identification or your preferences, to the various, or ultimately your value as well. I want to buy a plane ticket. Yes, I approve the cost of that transaction, without having the fraud detection and the call to the credit card company, et cetera, et cetera.
There's another thing I want to get back to really quickly here about what you said earlier about custody, because there's this concept, not your keys, not your coins, that we used to talk a lot about when it came to the exchanges. And now with the advent of the ETFs, them really taking off in the spot market as they are, it's like that concept has been lost a little on the new people entering the crypto universe. Do you think that there's a risk that people are forgetting that they can lose their crypto, that they don't have complete control over it when they buy it through an ETF?
I think, look, I think that the slope is slippery is the good news. And I think that also, the user interface on the ETF is great. At the end of the day, it's about, getting people, into the asset class and getting them on that kind of slope of what is this? How can I learn? How can I learn more about this? Generally speaking, what we found is that educated people become Ledger customers. The way that people find themselves, find their way to Ledger is they get some value somewhere. Could be Coinbase, could be Robinhood. From there, they become more educated. As they become more educated, then they learn more about self-custody and security, and they find their way to Ledger. So I think the ETF as a way for people to get really secure custody and exposure to the asset class, it's a great thing. And I think really, whether you're doing custody or self-custody, security is important. It's kind of this middle ground that I find the most scary. I think if somebody is buying access to the asset class through an ETF, through something like Robinhood, if they're using a great custodian like a Coinbase or a Kraken, those are all fair game. And then, when you come to self-custody, then security, matters a ton. The scary things to me are in the middle, where you have either insecure custody or insecure self-custody. Though that's really where the danger zone is.
Ledger Chief Experience Officer Ian Rogers, he's sticking with us through the break. Coming up later in the show, Kavita Gupta joins us to discuss the potential wave of crypto IPOs if the bull market sustains. Plus, we get her thoughts on how Trump's recent actions to turn to crypto might affect U.S. election outcomes and regulation.
And as always, to access all of the latest data and news on crypto, just check out CRYP Go on the Bloomberg terminal. This is Bloomberg. We're back with Ledger Chief Experience Officer Ian Rogers joining us from Paris right now. Ian, I want to talk about price movements and sort of what you see from your perch as Chief Experience Officer over at Ledger. How are you thinking about excitement specifically when it comes to Ether, given that here in the US, we could actually see approval for spot Ether ETFs?
Yeah, I mean, look, it is incredibly exciting. The question, and obviously, what an incredible kind of last-minute game change that we all got with the with the approval of those ETFs. I think it's but it's very tough to call exactly what will happen. We've seen the price targets come out of some of the financial institutions which are quite aggressive. So I think it's, and you just have so much going on in the market broadly. It's tough to call, but we're excited and watching closely, and personally I'm buying.
Well, when it comes to Ethereum as well, what does it do to open up the world of how crypto is used? I mean, there was a lot of conversation about the ability to build on Ethereum. Does that increase the value of it as well? What's the translation look like?
Well, I think the answer is absolutely yes. I mean, Ethereum is an incredible tool, for really securing chains that we can all build on, top of. And there's been, really, it's one of the main things that we have in this cycle that we didn't have in the 21 cycle is abundant, inexpensive block space, thanks to all of the Ethereum layer 2s. There's a great debate recently between Justin Drake and Anatoly of Solana, where they talked about the benefits of Ethereum versus Solana, and it just tells you that there is still a lot of debate around exactly how these things will be used and used for the long term, and exactly what kind of applications will be developed on them. But really what we have now, and what every startup has, is they do have many different tools to work with, and we'll see what applications are built over the next cycle with this.
Hey, Ian, I'm curious about the geographies here. Here in the U.S., with the election coming up, we're often asking our guests about different political parties and where they stand when it comes to crypto friendliness, crypto regulation. And I'm wondering, you being in Paris and living in Paris, why you see that as the best place for you to work on Ledger, and if you're bullish on the city and France as a place for development when it comes to crypto.
Oh, thanks for asking, because we are actually just opening Ledger's new headquarters here in France this week. And really, it's one of the first kind of crypto companies to actually have a headquarters like this, which maybe makes sense since we're a hardware company, that we have kind of the hardware of a traditional office, the kind that you would have pre-COVID. But I moved over here to work for LVMH almost 9 years ago, and have had the pleasure of watching the Paris tech community really grow. I think in many ways they always say that kind of the place to understand Bitcoin the least is the United States, and maybe the place to understand it the best is Argentina. But there are many places in the world where you just get a different perspective on how value flows from person to person, and certainly across Europe, there's just so many great development teams working on this problem. In France specifically, this is where the chip and pin, the same technology that's in your credit card and the same technology that's in Ledger, was invented, and you do have just incredible brains around engineering and security in general. So this is an amazing place for a company like Ledger to exist. It's why it was started here, and it's why we still exist here.
Ian, thank you for joining us. We really appreciated the ability to talk more about the technology itself and not just those price movements. That is Ledger Chief Experience Officer Ian Rogers. Now, coming up next, we're going to talk about Kraken weighing fundraising for an IPO as the crypto rally fuels deal-making across the industry. We're going to discuss it with Delta Blockchain's Kavita Gupta. Stick with us for that conversation about deals, IPOs, price movements, and more. This is Bloomberg.
With regard to going public, we obviously can't go into any kind of specificity on this particular question, but we're clearly always evaluating capital markets, private and public, and the like.
Are you having active conversations around it?
Again, we can't really go into any more detail on specificity around fundraising, whether private or public.
Okay, fair enough. So even if it's not through an initial public offering, is fundraising something Kraken's going to need to do in the near term?
Yeah, like I said, private and public are both, kind of avenues out there for Kraken.
That was Kraken CEO Dave Ripley speaking with Bloomberg last year. The exchange is now considering raising a final funding round ahead of a possible IPO. And a crypto bull market could pave the way for more public offerings. But of course, Bitcoin has been volatile, and therefore the deals environment has been as well. We're going to discuss all that sentiment with IPOs, deals, and regulation, what's going on in Washington with Delta Blockchain founder Kavita Gupta, who really, you get to see all the deal flow here. You get to see the venture money coming in. You have to assume that one of two things is happening. Either people are making these acquisitions because they're able to get them at good prices, meaning things are not that great, or it's finally opening the door again for more investment in the crypto community. How do you see it?
I think the Bitcoin ETF and the ETH ETF approvals have really helped other exchanges like Kraken, trading platforms like FalconX or Circle, or custody platforms like Anchorage, which are very regulated in US, to finally open up and say, okay, let's start discovering it again. But at the same time, the geopolitical situation, the lack of liquidity in the market is not really supporting a clear bull cycle either. So it's been volatile, and I think the technology continues to build, but the market continues to go buy and sell. And I think that's going to continue throughout the summer till we start seeing the US elections debates, at least.
I think we have to get to regulation pretty quickly here and what it means for different lawmakers to be seeking office that focus on crypto or not, for the president to be supporting crypto or not. At the end of the day, will this year be on hold for crypto just because the lack of clarity on who will be overseeing the regulatory environment in the United States?
I don't think the whole year, though. I feel like as soon as the debate starts, I mean, we have already seen that President Trump announced himself as the so-called crypto president. This is the first time so much any leader of any country any country around the world has actually gone so open about it. But at the same time, we saw White House trying to have some strategy with pro-crypto, but at the same time vetoing 121. So I think it's been a very mixed signals. But the crypto community claims, I think the volatility from Asia will start seeing much higher numbers in a positive way if we start seeing President Trump doing better in the debates. So it's been very exciting. And also, of course, just recently, yesterday, I think one of the liquidity issue is the French Prime Minister announcing that they would be dissolving the parliament. And there is a liquidity crunch in Europe, suddenly, as you can see.
I got to ask you about this tweet that you sent a month ago. You said, as a woman in crypto, this US election, I have to choose between right to my body or right to my work. Wow, unbelievable. The tweet went gangbusters, which I think makes sense. Is it really that black and white when it comes to crypto and politics in Washington, D.C.? Is that the choice?
I mean, it is becoming a single agenda voting, right? Because I've been paying my taxes. I've been in the space. I've been a public figure for a long time in the space. But at the same time, there is no clear regulations. Like since 1615, since Ethereum has come, it went through everything in 1617, and now suddenly it was a big surprise when ETF got approved. I think I went on the record on Bloomberg and said I'm not expecting it to get through, and it did. But at the same time, we are seeing that there is no real permissions to come up to really trade in it. So I think as a woman in crypto, it's very difficult because a part of me is not very happy how Supreme Court took decision on abortion, and at the same time, it's my job. It's where I also have a team of 20 people who are all working and want really young women to come into the space. And it has really become a single agenda, which is not the place which I'm really happy.
Well, how do you feel that the rest of the community feels when you talk to other people that you work with, your own staff, peers across the industry? How do they make a decision at the end of the day? Are they single issue voting on crypto?
It is a very big single issue voting on crypto right now, whether people say it openly or not, but in closed circuit, whether it's a men, women, everybody is like, hey, we don't want brain drain from this country. I've been an immigrant and this country has given me a lot. You don't want people to leave the country. You don't want your founders to say, hey, if you're going to really build this technology and it's going to have a crypto token element, leave the country. You don't want to be that VC.
What would you have to see from the Biden administration, the current White House now, to change your mind?
I think they really need to understand where is this technology coming from, where is the fear around this crypto and free money, everything which is negatively painted on it comes, because it's already happening. There are IPO companies like Coinbase, so it is happening in the country. There is over 93 million Americans who hold crypto today. So if that's going to be true, then let's just make sure that retail customers are safe by having regulation. And I think that starts by sitting on the table, very open, having the young chief of staffs and people who can really make those policy sit on that table, which has not happened so far.
Kavita Gupta, Delta Blockchain Fund founder, thank you so much for joining us. Good to see you here in New York. That is going to do it for Bloomberg Crypto. Join us again next week on Bloomberg TV. This is Bloomberg.